Welcome, friends. In this journey of simplifying financial jargons, we will deal with another financial jargon credit default swaps. So, first of all, what is a credit default swaps or how a credit default swaps can be defined? A credit default swap or CDS is a contract in which a buyer makes a payment to a seller to take on the credit risk of a third party. So let us understand this by an example. Say Mr. A lends 1 lakh rupees to Mr. B. Now, here a risk associated. If Mr. B defaults payment, then it will be a risk to Mr. A. His assets will be non-performing assets. So what Mr. A can do to mitigate or reduce his risk, he can sell this risk to Mr. C. Mr. C will take a premium, say rupees 1000, rupees 10,000, and if Mr. B defaults, then he will make good of this default payment. If Mr. B does not default, then he will simply take premium in his pocket and make profit. So, Mr. A risk is mitigated, or we can say the risk is spread, credit is spread. So, this is the credit default swap. Mr. A swapped his credit default with Mr. C. Now, another term is protection buyer and protection seller. Here, Mr. A is protection buyer because he is lending money and he wants to protect his risk. And normally, banks or financial institutions are protection buyers. Any individual or institution whosoever lends money actually have a risk of default. So they buy protection to mitigate its risk, associated risk. Now, just opposite of this protection buyer, there is a term protection seller. Anyone can be a protection seller, any individual, if he or she thinks he can take on this default payments or he can make some system or some way to take out money from party B so that he cannot be at risk. Normally, hedge funds or in US insurance agency, they are protection sellers. Now, you would have understood that this credit default swaps CDS resembles an insurance policy. It is just like that one. Normally, the terms and conditions of CDS or credit default swaps. are mutually discussed and agreed. But there is a international association for the same, ISDA, International Swaps and Derivative Association. They have standard formats, and most of the terms and conditions are guided by this form or International Swaps and Derivative Associations guidelines. So there is a standardized terms and conditions and formats, and most of the protection buyers and sellers use this terms and condition as their base term and condition. There might be some additional thing, but most of the things are simply copied from there. Now question arises, what are the advantages of CDS? The first advantage is, of course, you would have understood so far with these discussions, reduces risk to lenders, or you can say protection buyer. If they are not purchasing or CDS or credit default swaps, then the lending agency or institution have full amount risk. But in lieu of a small amount or a small premium, he or she or institution reduces their associated risk and transfer or swaps this risk to a third party, or you can say to protection seller. Second advantage is no underlying asset exposure, as this underlying asset exposure is exchanged or swapped with protection seller. So there is no underlying asset exposure at all, or we can say mitigated to a large extent. Third thing, or lending institution or seller can split risk with different institution or a protection seller. So this can be spread over. Now another question arises, is there any disadvantages of a CDS? Yes, of course, there is some disadvantages, like CDS can give lenders or investors a false sense of security. If default is more, even a protection seller can be defaulted, and it will prove like a simply sense of false security. There is no real security. One thing. Second disadvantage is these are traded over the counter OTC. So it reduces its credibility, you can say, or protection sellers are vulnerable. Third disadvantage is seller inherits substantial risk. They are not having much in their hand, and simply in lieu of a small premium, they inherit substantial risk. So these are the disadvantages of a CDS. Now I think you would have understood what is CDS or credit default swaps only. If you have any doubt, please do write to me so that I can make more in-depth or dissect the same to understand you fully. If you find some value in this discussion, please like and subscribe to this channel. Please also share with your colleagues and friends so that they can also get benefit out of this. Thank you. Bye.